Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Thursday, March 9th, 5:45 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. Downgraded the market state to correction after today's action. Check over here at the trend gauge. Leadership has been downgraded from bullish to neutral. Short-term indicator, which was looking like we were going to go to bullish earlier this week, back all the way down to bearish. Medium-term downgraded to neutral, long-term still at neutral, and this is all based on today's action. I'll go right to what just happened. So Silvergate Bank, this is a crypto bank. They said basically they're shutting down. They said they have the money for deposits, but they're not going to be doing crypto banking anymore, and they're shutting down. There's another crypto bank, SBNY. This is another crypto bank that initially was getting hit pretty hard yesterday, but that seems to have subsided. But in the meantime, a venture capital banks, SIVB, Silicon Valley Bank, um, is having a bank run. They're a VC bank. They have apparently some massive bond losses, and they're trying to raise $1.75 billion by issuing more stock to shore up their liquidity. Uh, there's never any there's never just one cockroach in the banking system, and that's what today's harsh sell-off. Today's selling felt different. Felt like there was a little bit of a panic to it. There was no bid whatsoever, but it started 2 days ago, and we mentioned how harsh the selling was in small caps and mid caps, and further research into that showed a lot of it was smaller financials that got hit hard. That kind of stopped after a day. Uh, you usually things happen all the time for one day in the market. It's when it repeats that you have to start paying more attention to it. And right out of the gate today, mid caps and small caps were lagging. But before the open, we had some negative unemployment data, and the futures went from being down a third of a percent to being up a third of a percent by the time we opened. Remember, any bad news to the economy indicates that the Fed might be able to stop raising rates, and we can get back to some more normalcy. Means inflation's under control. Uh, Understanding unemployment is going to rise, but that's going to get supply and demand back in equilibrium. But nobody was talking about a major banking issue. This is kind of a black swan that came. I mean, a black swan that came out of the blue, which is that's like from the Department of the Redundancy Department. But bottom line is, when you've got massive selling like this, and then in addition, we broke below the 200-day moving average by the end of the day. All throughout the day, we were getting stops hit, getting more defensive, selling, putting hedges on. A lot of the stocks that we have held up just fine. They were down a very acceptable amount relative to the market. Others started breaking the 21, and we got stopped out on those. We'll go through what's left in the portfolio and our hedges and what we're looking at for next move, but expect some increased volatility, and they haven't been able to price this offer yet. So who's going to give a bank that they have questions on $1.75 billion? Where I'm sitting, you'd have to be crazy to do that. So uh, we'll look at the chart of this, and you'll see that this bank was already under a lot of pressure, and today down over 60%. Uh, we'll see where this takes us, but you know the way we roll here at Revere. Our number one job is managing risk, and there was a lot of that going on today. So let's go through the numbers. G6 down 2.6%. S&P 500 down 1.85, NASDAQ 100 down 1.7, Dow down 1.7, mid caps down 2.4, Russell 2000 small caps down 2.8. Global 60/40 down 0.89. It looks like money is heading into bonds, not necessarily, or the bond price is not necessarily reflective of rates, but money flowing into that, which will bid that up and bring rates down as a flight to safety. And that was one of the things that this Silicon Valley bank mentioned. A bunch of people pulling their money out and putting it in treasuries. So, do you do that with just one bank? I don't think you do, and that's why there's more fears related to the banking sector. In-house protection, we were down 1.13%. We'll go through the tail of the tape and some charts. Let's get right into it, and we'll start with what we always do. You hear me say at the end of every video, it's not how much you make, it's how much you keep. I've been saying that a lot over the last 14 months, and yeah, it does wear you out, but we're not going anywhere here at Revere. We've got we don't get worn out, we don't get scared out, we get in or out based on our rules. And our number one rule is to avoid the last 13 bear markets. All of them occur under the 200-day moving average. That's the black line on this chart. We touched it twice over the last 2 weeks. We broke it today with velocity. In fact, things were looking good early in the day. Let's go to a 5-minute chart. You can see here we gapped up, we moved up higher right into the 21-day moving average. We were looking at our longs to see if there was anything that was acting well and if we were going to get back above the 8 and the 21 based on this poor employment report, which the market has been waiting on. Would we be going on the long side? But back to the 5-minute chart, that quickly stalled. And then you can see the selling that came into the market starting a little after 11 o'clock Eastern time. And it was just relentless, a little bit of a bounce at the close or the last 45 minutes before selling off the last 10 minutes. And we're down a little bit more after the market, but not panic selling after the market. So, all in all, uh, this breaks the recent lows, breaks the 21. Maybe we'll rebound back above it by the end of the week. We are 0.6% beneath the 200-day moving average, which had just started to tick higher. In fact, it actually is 9 cents higher today than it was yesterday, but we go lower, that's going to get yanked right back down. And as I've been saying, you need a significant angle to the slope to act as support. We didn't get it. We did bounce twice on it, as I said, the last 2 weeks, but we broke right through it today. And the big weakness, even weaker in mid caps and small caps, which we'll see momentarily. Additionally, after coming off of oversold, we've got a bearish hook back down or into oversold on the stochastic. So not a lot going in favor of the bulls right now. So basically, we're looking at a uh, 2-day rally that got extended in the third day, reversed, and now uh, Tuesday and Thursday, some harsh selling, and then add in the SIVB banking fears, and we've got a recipe for defensiveness. So there's the S&P 500. Let's go to the NASDAQ 100. Still the strongest. Got back above the 21, challenged this 300 level, which was support back the beginning of February before we broke down. But a hard reversal, still above the 200 and the 50, but it's the only one of the indexes that's lucky enough to be able to say that. Here's the Dow after breaking the 50 and the 21, now broke the 200-day moving average today. Also, here's mid caps. We undercut and reclaimed the 50-day yesterday. That was good news. We broke it with authority today, down 2.4%. And then small caps undercut and reclaimed the 50-day yesterday with a nice close. Broke it again with authority, sitting right on the 200-day moving average, and the stochastic is indicative of what's going on with every index except for the NASDAQ 100 hooked down, but is not into oversold yet. Not, I don't have a lot. I don't have anything, frankly, good to say about the action today. And when fear comes into the market, it becomes irrational. You'll see big swings up, big swings down. And until things settle, like I said, there's never one cockroach when it comes to Banking, because there are so many counterparties on all these derivatives and loans and interbank deals, and uh, then you've got the bank run. Everybody rushed to pull their money out of the crypto banks. They rushed to pull their money out of crypto itself. They're going to rush to pull money out of any bank that has a question above its head, like SIVB does. Let's go to some other indexes. So the dollar weak all day benefited stocks early, but really just gapped down and then traded in a very tight nickel wide range on the UUP. The VIX, you got your volatility event today. Everybody that was waiting for it, the VIX up 17%, up over 22, back above the 50 and the 21-day moving average, and it reminds me of that boy that escalated quickly meme of Ron Burgundy after after the fight in the alley with the other news anchors, but um, not what you wanted to see today from the VIX. Now let's go to the equal weight indexes. They were weaker than their big caps because it looked like banks, or it looked like institutions were parking money in the big Nasdaq type stocks. Uh, QQEW down 2.1%, worse than the equal weighted Q, and RSP equal weighted down 2.2, worse than the market cap weighted S&P 500. Also, there's RSP just above the 200-day, and there's QQEW, which has broken the 50-day. Now let's get to bonds. The broad bond index, first of all, up 0.34%. Bonds are looking like a big flight to quality now, with questions about the banking system. So, and particularly that would not think that that would include corporate bonds or junk bonds. Let's look at junk bonds, just down 0.62% today, worse than, very clearly worse than the quote unquote safe bond indexes. Let's look at TLT here, which is 30-year treasuries up on the day. So the yield actually dropped. IEF 10-year up more on the day. So the yield dropped even more. Uh, Corporate bonds, LQD, down on the day. Again, if we're having questions about financial system and companies, corporate bonds and junk bonds are going to be a problem. So SJB is an ETF we've looked at in the past, and that might be a decent play here. It's a junk bond, inverse junk bond ETF. In fact, I'm going to set my alert here on that. So that might be a way to generate some capital appreciation from an issue with junk bonds. Let's move on to gold and gold stocks. Gold, safe haven today, up 1%. Silver, safe haven today, up 2.2%, but finishing at the bottom of its range. Gold stocks were up big early with the dollar down, but they reversed as it was a sell the equities day, down 0.5% and making lower lows. Let's look at Bitcoin. Down 9%, breaking a bunch of key moving averages, and very clearly this is screaming risk off. So those are the major indexes that we review. Let's go to the tail of the tape now. Market state to correction, all the stochastics negative across the indexes and the G6. Fear and greed down 10 to 35. We're off the bull case onto the bear case now. Break below the 3-2 low. That was our line in the sand, 39.28. We broke it today. We did not break the line in the sand for the NASDAQ 100, but we did for the S&P. I mentioned the news that came out at 8:30 with the jobless claims higher than expectations, and the futures took off to the upside in there, but that didn't last long. Day count down one. It's a big down one. Third day below the 8 and the 21. We actually got back above and reversed below the 8. We touched the 21 and reversed today. Big time to the downside. Expectations now negative with us being under the 200-day moving average. Let's go to 11 out of 11 sectors negative, headed by, let's look at XLF. That does not look good. Break of the 200-day moving average. This is financials, and this is actually down 4.1%, but this actually includes a bunch of non-financials like insurance companies in there. And let's go to KBE, and this will open your eyes. Down 7.3%. This is the big bank index. The smaller bank index, regional banks, down 8.13, even worse, making lows going back 52 weeks. So you got a big problem in the banks based on the action here. Bounces are severe when, as I said, when emotions come out. You might have Jerome Powell come out and say that they're backstopping the bank, and we might get a big move up. But uh, it needs to be sustainable. There needs to not be panic in the market, and this is why when you're under the 200-day moving average in the indexes, you get the big days and big up days and big down days basically right next to each other. That's why the idiot statement that if you miss the 10 best days, it's impossible to do that without missing the worst days at the same time. So we've documented it here. We protected capital during all of 2022. We got back in a couple times during the year, not with any significant exposure. The most significant exposure we had was last week when we, with that nice shakeout and accumulation day and getting back above all the moving averages, topped on the third day, and now gave it all back. So it's not an opinion, it's a fact. It's what's going on with the market, and we react accordingly. So let's get to the what we did in the portfolios. We sold a bunch of stuff. Iridium, Revance, Tesla, Net, and Airbnb. We trimmed Palo Alto, and we put a big size hedge on. We've got 15% in SPXS and SPXU. We still are holding our five best stocks: NVIDIA, First Solar, Palo Alto, ANET, and TMDX. And we're holding TBT, which, if interest rates go up, this will continue to go up. I'm thinking I'm going to get stopped out on this because um, I'm expecting interest rates to go lower because of a rush into treasuries. But SIVB, well, anyway, this took our exposure coming into the day to basically even with the S&P 500 to 0.20. So 1/5 of the risk of the S&P 500 going into tomorrow. Bottom line, banking fears ignite harsh sell-off. S&P 500 below the 200-day moving average, and other indexes breaking down also. So first, let's go to Silvergate. And geez, let's look at a weekly chart on this. We made some nice money on this. This has now dropped from 200 to $2.84. The big drop coming over the last 2 days. SBNY is the other big crypto bank, Signature Bank, down 20% today, or sorry, 20% on the week. Today, down 12%. It was down worse last night after hours, but making new lows. That doesn't look good. But SIVB is the big problem now. So let's look at a monthly chart of this. So this was a bank that was trading in December of 2021 at $760. It's trading now at $106. After hours, it's actually down another 20%. It's trading at $84. Down 63% this week, down 60% today, and they're trying to place an offering of $1.75 billion. This is going to be a massive dilution of their share count. And like I said, would you put money into a bank? A headline just came out that Peter Thiel's Founders Fund advised companies to withdraw money from SIVB. So how about that? It's leaving me a little bit speechless, but that's what contagions are. They catch you, and all you can do is look to be prepared. And I continue to say these things happen under the 200-day moving average, and that's where we are now. So we've got the defensiveness built in for clients. Let's get to a portfolio review of what we what we sold, what we trimmed, what we're still holding, and what's gone. We'll start off with what we sold today. Tesla, I said 180 was the line in the sand. It undercut 180 overnight. Then we started rallying pre-market and was back above it. but then broke down back below it. So we took our profits on the rest of that in the teens, up mid-teens. RVNC, week yesterday, week today, RVNC. Week yesterday, week today, we sold this early in the day. It bounced at the 50-day moving average, but it's not a leader. Expected leadership based on the bounce back above the 200-day, the 21-day moving average, and two undercuts and reclaim of the 21 after the sell-off in earnings. Looked like it may have been overdone, not overdone. Broke below the low of that consolidation. Sold half yesterday, sold the rest today. So we're out of this. Small loss. All these losses were less than 0.1%, which is what we target for our starting positions, which are 1 to 2%. So next up, Airbnb. This just hasn't worked. Sucked us in a couple of times. Now broke below the 21. We're completely done with this now. Iridium, IRDM, one of the stocks that was up today, but second close below the 21. Didn't do what it was supposed to do after these two nice big post earnings days. It's just been being sold. And then when I saw the volume 2 of the last 3 days, we sold that 1% remaining position of that today. Again, less than a tenth of a hit to the overall portfolio. Same thing with the remainder of net that we sold. Very clear break of the 21. And those are the 5 that we exited. We trimmed Palo Alto, as we've done 3 buys on this. The last 2 are now underwater. So we got rid of 2 of the 3 buys as it broke the ADMA. Still acting fine after its earnings gap up, but there's going to be a headwind now on stocks as long as this uh, is hanging over the head of the market. First Solar, didn't sell any of this today. Still holding our 3% size. This is still acting like the king. NVIDIA, 2% size in this. Didn't sell any of this. Sitting on the ADMA. ANET, also one of the absolute top 5 stocks. Negative reversal, still finished positive on the day. Huge volume the last 2 days. We're holding our 4% size in this. And TMDX, we've got a 3% size in this. Ugly day. With some volume, broke below the 8. Just our last buy on this of a 0.5% is underwater, so we may trim that tomorrow. My expectation is, even though we love the story, the market is not the reason. A bad market is not the reason to stay in a good story stock. They will all get taken down. We can always sell it and re-enter it if we need to. So that's what we did to the portfolio. I reviewed those last 5. We're still holding them. TBT is still it's sitting right on the 21. TLT sitting right on the 21. And that's going to summarize it, and that's going to wrap it up. So where are we in the cycle? We're back to mild correction mode. We're down 6.6% off the highs. Getting close to that -8%, which takes us to a moderate correction. We get to the moderate correction, we'll start having minor outperformance. If the market goes down, we go back up, we're going to lag for a little bit. If we go back and go back into off of the mild correction and into the mild pullback, because we're underinvested right now with the break below the 200-day moving average. So that's the expectation for how we'll manage the portfolio. And as always, underperformance, short-term underperformance is worth it to avoid something like these bear markets, which occur all below the 200-day moving average. That's going to wrap it. As always, love to hear from you. Don at revereasset.com. The phone is 855-REAL-WEALTH. That's 855-732-5932. And with that, I will wrap up Thursday, March 9th. Don Vandenbord telling it like it is. Just the facts here at Revere. They're not always what you want to hear, but it's what you need to hear. It's not how much you make, it's how much of that you can keep. Thanks for listening. Have a great week. Have a great evening or day or whenever you're hearing this. And we'll have the big show on Friday, and we'll be also recording the podcast tomorrow. Take care, everybody.